I think it's a very interesting time where artificial intelligence, data analytics, robotics, quantum computing, genomic sequencing, and battery storage these are some of the phenomena that are all evolving, and they're all on an S curve simultaneously. Now, how these converge, when they converge, I think that is going to really transform the way the financial industry exists today. Now, add to that mix the CBDCs. If the CBDCs start to become more mainstream, again, the way we are structured as a financial industry, the whole conversation will completely change. You bring in the cognition part that is increasingly coming in via the AI and the next gen AI and all of that, and start bringing that into your processes in terms of how you engage with the customer, how you create the products. Then the way the regulations are evolving to enable more and more non-conventional in the sense of the historical way when there was a very clear demarcation between the financial service provider and a non-financial. Now that boundaries are increasingly going away. So I think that evolution, the technology evolution, the customers' preferences, the way our lives would change because of these technological evolutions, I think the combination of all of this, how it will transform the banking industry, it's very hard to predict. But one thing I'm absolutely certain of, that it's going to be some fascinating times to live in. It's going to be something that will see a completely new kind of business models that will come up, completely probably new definitions of financial services and financial products, and what does financial services actually mean from a customer perspective. I think we're in a very, very fascinating times. And the next 5 to 10 years are going to be absolutely phenomenal. Because the speed of evolution of technology, I mean, if you look at Gen AI, now literally every week there is a new version of a Gen AI tool that is available and a completely new application of the Gen AI tool that is becoming available. Now the pace of evolution, the pace of change, and the kinds of possibilities it opens up, it's very hard to keep pace with that, because what you require for that is also a certain skill set. Similarly, if you are in a regulated industry, you can't just go out and literally overnight change your processes, business models, product offering, and whatever else. Similarly, how do you engage with these new tech? What kind of risks does it open up for you? What kind of privacy issues does it open up for you? What kind of regulatory restrictions or challenges does it throw your way if you want to adopt to that at a fast pace? What kind of investments are required? If those investments are all dollar-based, so then it requires massive FX availability in the country. And not to forget, you need quality of people, you need the skill set of the people that is able to go out and manage all of that. So I think all of these things continue to be a challenge. So it's not that easy for anybody to go out and predict or plan or whatever else. The best way to do is, one, to stay open to change, to continue to be willing to learn and run at least small experiments on an ongoing basis, so that the knowledge base remains within the organization. Some learnings are there for us, and wherever we see the opportunity, we can start to scale up around that. When we talk about a lifestyle or an ecosystem, a banking environment or a financial services environment, the key component is that the banks are just one part of that ecosystem. Banks can only provide certain products or services for that ecosystem, but that ecosystem has to be ready to go out and scale up, to create that, to take this value for their customers as well, and to be able to also deal with the banks, given the fact that the banks work under very strict regulatory regime. So while it's very easy for people to go out and trash the banks for being slow, for being conservative, for being very regressive in some people's views, but the reality is we operate in a regulated environment. And I'm not saying that in a negative manner. I think it's important because considering that we are the custodians of large amount of customers' deposits. So it's obligatory on us to be very prudent in terms of how we manage their money, how we manage the information that comes with their usage of their accounts, because yes, data is power, data is exciting, but how do we use that data? How do we make sure that the client's privacy is managed and maintained? How do we go out and manage that the client's data is not compromised? So all of those are real concerns. Similarly, in this day and age, when you interact with the third-party systems, AML, KYC, I mean, those are real challenges of the current day. So we can't just be the trigger-happy entities who just give APIs to any and everybody and say, guys, go out and do whatever it is. So I think it's a combination of understanding all around the ecosystem of how we need to operate, what their roles and responsibilities need to be. And that understanding, I think, is where we see some of the gaps at present. So what that does is that limits the kind of products or services that we offer to some of the ecosystem players, not all of them. The other challenge is, again, for all of these ecosystem players, they also need to have the ability to scale up. So do they have the technology infrastructure that is able to scale up? Do they have the kind of investments that they can scale up? So you will see a lot of these small fintechs or e-commerce entities or whatever else that keep popping up. But do you go out and you integrate with all of them? It's a cost to do that. It's a challenge managing that and maintaining that. Or do you wait? Do you see? Do you become more selective? So I think it's a lots of those challenges that exist out there. So ecosystem banking or lifestyle banking, it's not just about the banks. It's about all the other players in the equation. They need to be ready. They need to be equipped. They need to be able to work with the banking industry to go out and offer the more scaled, more meaningful, and a more sustainable offering to the customer. It's the other entities, they need to also come up with a more scalable, sustainable business model of their own, where the financial services just plug in as one of the value adds. But their own business model, their own business offering, their own business proposition has to be sustainable on its own, where the financial services become a value add to enhance the customer experience. It's a very exciting time for the payments in this country. I think this could be that inflection point where small ticket retail payments become more digitized. Because one thing is for sure today, you can go to any small shop or anybody, any handy person that comes to your home to do any service or whatever else, they all have an access to some shape of an account now on their mobile phone. So I think that journey has already traveled some distance. The RAST P2M, I think the acceptance infrastructure, a more formal acceptance infrastructure will come into place. Even today, when you go to a small shop, you do a fund transfer to their accounts, and that informal exchange is happening. But that informal exchange gets lost in the translation. There is no documentation around that. So I think this RAST P2M will enable us to track, to document, and kind of understand how this transition is happening. A lot of the reason, one of the major reason that the retail payment could not scale up from a digitization perspective was, one, the physical form factor of plastic. It has its own challenges in terms of the cost of plastic, in terms of delivery of plastic, in terms of management of plastic. Second, the massive infrastructure investment required to scale up the physical card acceptance infrastructure. So a combination of these two has always restricted or limited the opportunities for the retail to accept digital payments. And I think that's where a RAST P2M QR could probably be a real game changer. So it is not going to be 100% coverage, but I think it will be significantly large number of merchants compared to what we have today for the physical card-based payment infrastructure. And that's where I think that will open up lots of other avenues, because that then means the banks will start to see some sales cash flow for those shopkeepers. So you can start to do your lending products around. Your sales cash flows can then be tied with the supply chain part of it as well. So you could start to link those, create more interesting business models around there. So I personally remain very, very excited around the RAST P2M QR and the opportunities that it can potentially offer for the revolution of the small scale retail payments digitization. I don't see the branches becoming irrelevant, for the reason that I think while we can do a lot of digitization, so today your branches, what they do is a lot of your branches have become more of an operations centers. So they deal in cash, they open account or they deposit cash or withdraw cash, or they give you the pay orders, or they take your loan applications for car loans and personal loans, or sell banca, and that's primarily what happens in the branches. All of this very easily become digital. It already has most of it become digital. Obviously, the cash deposit, cash withdrawal cannot be digitized. As that transition happens, so these branches should then evolve to become more of a high-end advisory centers, where slightly more complex products can be sold to the customers, where a better advisory services can be given to our customers with more complex needs. Today, our product offering or everything, it's very simplistic. It's plain vanilla. So I think that opportunity exists for these physical infrastructures to evolve into becoming those kinds of advisory centers, high value customers, more complex products offering, and in a more better quality of personalized service offering to those clients, vis-a-vis taking all of these small ticket, high volume transactions, which don't need to happen in the branches. So I think that's where I see the branch network evolving over a next period of time.